Did you know gold has been used as money for over 5,000 years? But today, traders like you and me flip it from a phone or even a laptop using something called Xauusd. Every single day, gold trades over $200 billion in the forex market. That's more than Bitcoin, Tesla stocks combined. And the best part, with CFD, you can trade gold using something called leverage, meaning you don't need a fortune to start. You don't need to buy actual gold bars, you just trade the price movements. In this video, I'm breaking down how to start trading Xauusd in 2025, step by step. At the end of this video, you'll be able to confidently start trading Xauusd like a pro. I'll also throw in a bonus if you stick around till the end. Let's get right into it. Now, in order to trade gold, you need devices. What are the essential devices you need to trade gold? Your smartphone and or your laptop. If you have money, you can get the two of them. And you also need a very strong internet connection so that you're able to take advantage of market movements as soon as they happen. Now, for starters, it's not required that you get a high-end device, that's in terms of a smartphone and a laptop. But for you to be able to get better entries, for you to be able to take advantage of those movements as soon as they happen, you need to upgrade your devices. Next, once you've gotten your devices, you need to be able to identify Xauusd. That's where XAU is the base pair and USD is the code pair. You also need to know basic pip calculations in gold. Now, for example, a single pip on gold is taken from the first decimal place. That is, if you have a movement from 3,250.1 to 3,250.2, that is a 1 pip movement, as well as a move from 3,250 to 3,255. That signifies 50 pips of movement. Now that we've known the basic pip calculation, next up is our trading platform. Now, the most popular trading platform most people use, especially for charting and analysis, is your trading view. And for execution of your trades, we use the MT4, MT5. We also have MetaTrader, TradeLocker. There are so many different ones out there. But for the purpose of this video, I'm just going to be making use of trading view and the MetaTrader 5. Here's a screenshot of how it looks on your phone and how it looks on your laptop. Another thing you are going to need in terms of platform is going to be your broker. The link to my personal broker is in the description of this video. And what your broker does is to help you place your orders and also provide leverage for you to trade. Now, if you are just a beginner, you can also try demo trading or paper trading. Your broker will provide a platform for that. And once you start getting more and more experience, you can now start funding your account. But it's advisable not to trade demo account for a prolonged period of time. After downloading the TradingView app from your Play Store or your Apple Store, what you want to do is to add Xauusd to your watch list. So what you do is you go to the bottom of your screen, look for the add symbol, click on it, type in Xauusd. It's going to bring out a list of different brokers that offer Xauusd. So anyone you want to add from any broker, here you see you have Owanda, you have Forex, you have FXCM. So you choose anyone you want to add. I want to add this FXCM now. I've already added it, but I'll uncheck it and add it back. So you see unchecked, now added to watch list. So you go back and you see it has appeared there on my watch list. So in order for me to trade this right now, I can either go through this place, clicking on it and clicking on this icon here, and it takes me directly to the chart and I can start doing my analysis here. Now on the TradingView app, you have this button here that looks like a pencil, a drawing tool that brings out the menu for all your tools. So you can place your trend lines. You can also put your risk to reward tools for long and short here. Now this place where you see Xauusd over here, you can see that I can scroll it. It enables me to move to a different asset class I want to trade. For instance, if I want to go to a different pair on my watch list, I just scroll on it. I've gone to the XY now, go back to my Xauusd. Then you see where you have 15M, select your time frame here where you have this 15 written here. So you can either scroll to switch time frames, or you click on it and select the time frame you want to look at. The same thing applies when you're also accessing TradingView via the Chrome browser or the PC app. On PC, just find this website, tradingview.com. Once you are there, you sign up, you log in, and you go to super charts, and this interface loads up. Now, as you can see here, we have our time frames, everything easy to on display here. We can search for symbols. Here we have our tools on the left. On the right, we have our watch list. Now we want to add Xauusd to our watch list. So now find your way to this icon, the plus icon here. You click on it, add symbol, and you type in. It's going to bring up a list of brokers just the same way it did on the phone. So as you can see, I already have these three here. So if I want to put this FXCM, or I want to add this one, this Pepperstone, I just click on the plus icon here. You see add to watch list, and the automatic list has been added. If we come down here, you can see it here, and this is the new chart. This is the new chart here. So apart from that, you can do your analysis here. Now once you've got your login details from your broker, you want to come over to your MetaTrader 5 and input those details and log into your account. Go here, we're under manage accounts. See the plus button at the top. Here you see find broker, then you type in the name of your broker. It brings you to this place where you have to input both the login and the password. So once you have them from your broker, you just copy them, you paste here, and you log in. The next thing to do will be to go to quotes. Here I already have Xauusd selected, but if I wanted to add it, I'll click on the drawing icon at the top right, click on the plus icon, then I will look for the symbol Xauusd. So you see it's already added. I can't uncheck it because it's already added. So I go back. Next thing you want to do is go to your charts, and from here you can place your trades. You have the buy button, you have the sell button, and you can increase or decrease your lot size from here, or manually enter it. Now we move to the trade menu. On this trade screen, you can monitor your trades here. You see your balance, you see your equity. You are also able to close any running trades if you have any. You're able to close them from this screen here. The same thing applies when you're trading from the laptop. After acquainting ourselves with the broker and their trading platform, the next thing for us to do is to create a strategy that is repeatable and that works. Now, how do you create a repeatable strategy? One, you either copy from someone, you backtest it, and you start using it, or you combine some basic forex principles and observations that you make for yourself on the market, test it multiple times if it works, and voila, you have your own strategy. For testing and backtesting any strategy you want to use, I recommend using anywhere between 50 to 100 trades of backtesting and forward testing. Now, backtesting simply means going back in time on your charts, that's scrolling to the left on your trading view charts to view the historical data and see how those conditions in your strategy played out. And forward testing, which simply means trading in real time. Now that we have a working strategy, the next thing to do is to determine what type of trading we are going to be doing on gold. Now, how do you determine this? Based on your strategy you've tested already, you know what time you trade, you know what times your setup plays out, so this already gives you an idea of what is possible with your strategy. For example, if your strategy takes advantage of small pip moves, maybe you say from 10 pips to 30 pips, then you could become a scalper. But if you find your strategy playing out over the course of a very long time, maybe from a whole day to more than a day, then you might either be a day trader or a swing trader. Next thing to do is to get capital. You can't trade forex without capital, and there are two ways you can trade the forex. Either you trade with your personal capital or utilize proprietary firms. Now, proprietary firms, similar to your broker, give you money and leverage to trade gold, but you have to pass the challenges that they set out for you. It's usually in form of a phase 1 and a phase 2, or they have other options depending on the proprietary firm you choose to use. But be careful, there are so many untrustworthy proprietary firms out there. Do a lot of research and check reviews either on Twitter or Google before choosing a proprietary firm. With proprietary firms, you have access to larger capital. Now that we have the capital to trade, the next thing for you to do is to constantly review and reevaluate your trading and strategy. You refine your strategy depending on different market conditions. That is, you test your strategy in different market conditions, because there are some periods where your strategy might not work. It doesn't mean it's not a good strategy, it just means it's not working in that period. So you can either tweak your strategy in little bits based on the current market conditions, or you completely stay out of the market during these times. But if your strategy is continuously unprofitable over a long period of time, then I guess it's time for you to switch to another strategy. With this, you should be able to place your first trade on Xauusd. Nice, you stayed till the end of the video. Now here's the bonus I promised earlier. It is going to be a snippet of my process of creating strategies for trading gold. So what I usually do is I follow this 4-step process. I identify the session with the most volume or movements. I choose the time frame I want to trade gold on. Identify the repeating price action during that active session, and I make a rule out of it. Then lastly, I backtest and I journal. So let's get straight into it. Now, for the first step, identifying the session with the most volume or movement. Now, what does this mean? Now I'm on the 1 hour time frame. There's a tool called session highlights. You see the one I have here to my left. It's called the CM Forex session highlight. If you want to get something like this, this is what it does. You see, it highlights every single forex session, and you can also tweak it as you choose. Here are my settings. Here are my settings, the different colors, the color codes and all. Feel free to pause. Okay, so now if you want to get this session highlights, you just go to your indicators tab here, indicators tab, and you search for session highlights. Let me see if I can see this. CM Forex session highlights. So you can see there are 2 here, so I think it should be the first one. Now, what does this session highlight do? Enables you to see at a glance your sessions. So this, for the color code, this blue indicates the start of the London session. Here the green, a bit of light green, indicates the start of the New York session, and this period in between where the color is a bit darker indicates where the London session and the New York session meet, while this is the start of my Asian session here. Now, in order for me to identify a session with the most volume or moment, you don't even need to think too far. I just take my tool and just pick out the big moves I can see on gold. Starting from this black line, let's just say I want to start testing from here. So I can see a big move upwards here. Now mind you, these are very big moves because this is gold. So if I take my measuring tool here to see how many pips this has moved, see, this move alone is about 258 pips. This is a 258 pip move, so that's a lot on gold. So this is a big move. I'll just keep marking out the big moves. So this first big move happened in London session, or it started from pre-London into London session, then into New York. Then we had this smaller move down, then this big move, this spike up, probably due to news. We have this other big move during the Asian session to pre-London, that's of the next day. We also have this big move here, then this other big move, this big move, this one too, this one too. Now for the more obvious ones, this one, see the big move all the way down to New York. So throughout the entire day, this was selling. So a lot of volume during London and New York. So the first condition is identifying the session with the most volume and movement. So taking these few examples that I've given here, I can already tell that, okay, majority of the time, most of the moves happen during London and New York session. Here also London, New York session. Here London, New York session. Here Asian session. Here London, New York session. So I've already known my session is London and the New York session. So what's the next step? Now I choose the time frame. I've identified the moves using the 1 hour, but I'm not going to be trading on the 1 hour. So I'm going to look for my price action on the smaller time frame, which is the 15 minutes. So I scroll down to the 15 minutes. So now that I'm on the 15 minutes, let me update this. So I already know my session, my time frame. That's the 15 minutes. Okay, so now that I'm on the 15 minutes, what am I looking out for? I'm supposed to look for, I'm going to identify repeating price action during those active sessions and create a rule. Now, for the process of creating the rule, the simple tool you need is observation and basic price action knowledge for gold. You don't need anything too complex. You don't need plenty indicators. You don't need anything. Now that we've already known these sessions, we can remove these forex highlights. Now, this is the 15 minutes. What I'm doing on the 15 minutes is to check why this move happened and what type of price action happened there. Now, at a glance, you can see that there's a sort of support created here. And before this move happened, price reacted there. You can see there's a price reaction here just before the London session here, pre-London. So based on my own strategy and how I read price action, I might not have taken this because I usually wait for this till the start of my session, which is the London session. So at the start of the London session, I wouldn't have had an entry here because the risk here would have been too much for me to take. So I wouldn't take this trade. So this one will be out of it. I can just delete this. Now we go to the New York session. This move going down. Why did this move happen? We look to the left, you can see the resistance here. And see the price action here. It's not too convincing, and I might not have taken this one. So this one too is out of it. Now this last move going upwards, you can check to the left, you see the support here, and now this one is looking a lot better. So after this doji, price went up, then give this impulse candle here, impulse bullish candle, or let's just say momentum candle. So price went down and buyers pushed the price all the way back up to close bullish. So this would have been a possible entry, although it's not like an A+ entry, but for sake of this video, we take our entry there, our stop loss below. Then we determine what our risk to reward will be. So are we risking 1 to 3 or 1 to 2? So we just take a 1 to, let's take a 1 to 3R. So this is a 1 to 2, this is a 1 to 3, this is a 1 to 3. So this is a 1 to 3R. Okay, let's do this for the next one. Now this one is in Asian session. So if we look at this from the left, we can still drag this all the way back here and see that price also reacted to this level here. But this candlestick formation here is not something I would like to trade. It's not really a good confirmation for me. So this will be out of it. Can delete this. Now to the next day, we see a lot of consolidation here, then a sharp move down. So there's a high chance I might not have caught this move, because from here this is my highest point and this is my resistance here. Price didn't get to the resistance before dropping, so nothing here. But here we have a smaller resistance here that was created here at this point here. Then price came all the way back, gave this engulfing, so this would have been an entry here at this engulfing. The stop loss just here, and take profits targeting a 1 to 3, a 1 to 3. A 1 to 3. Take that move. Now check out the other one. When price got back here, we look to the left, see some form of support here at this level, but this is just one candlestick confirmation. So, and this candle is too big. The bullish pressure, the bearish pressure, sorry, is too much for me to just react on this candle. So this would have been out of it. We can cancel that. Move on to the next day. Now this is pre-London. Price got back here, so we see some form of support here again. Now, just from these little things we've done, we can see that our strategy is revolving around support and resistance and price action at those zones for us to get our entries. Yeah, so I think we've taken like 3 trades now. 3 trades. Okay, I don't want this video to get too long, so let me just continue with this. So now that I've identified a repeating form of price action, just giving the sample size of just these 3 trades. 1, 2, oh, that's 2 trades. Okay, so let's do one more trade, so it's at least 3, or let's just make it 4. So okay, let's see price action here. At this point, support, 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 but this price action is not convincing enough, and this is market open. So at market open, if I look to the left, it's a breakout. So this is a breakout from resistance, and from the past 2 trades, what we've been taking have been reversals. So this now is entering into a different kind of strategy, so I wouldn't take this trade. I'll just focus on trying to catch reversals. So this will be out of it. We check again for this move. We look left, it's too far, it's too far, so leave this one out of it also. Now we check this out. New York session, we have our support. Now we have a hammer candle here. Now this hammer candle is a small enough confirmation. We take the entry, take a long for this second hammer, stop loss below the wick for a 1 to 3. Is a 1 to 2, 1 to 3. Okay, perfect. And it's also in New York session. So you see, we are following the rules that we are creating along the way. Now next, this will be our last one. So we have a London session. This is support, sorry, resistance. Price tapped here again to give this engulfing. Take a short position, stop loss just here. It has a lot of pips. Okay, and we target a 1 to 3. It's 1 to 2, 1 to 3. So we have these 2. Okay, so taking this small sample size of trades, assuming, so this is 1, 2, 3 and 4 trades. Now we've been able to establish a rule here. So our confluence / rule is we look out for candlestick confirmation at support and resistance. Then what else? Our risk is, let's just say 1 to 3 R for easier understanding. That means I'm risking 1 to get 3. So now that we've gotten a strategy that we can somewhat repeat, you see that it's repeatable. So we're able to replicate the same thing here, same thing here, same thing here. Although you see that the actual risk in terms of pips and the TP are different across all of them. That brings us to the next part of this process, which is the backtesting and journaling. Now, in order for us to do that, we need to be able to know what our exact risk is. You know, if we are taking a trade, since all the risk in terms of stop loss are not equal, we have to take an average to know, okay, we should be risking at least this, or at most, if we are going to draw down, this is what we are risking. So that brings us to taking the average, our average stop loss. And how do we get the average stop loss? We just add all the different stop loss in our sample size, or in the trades we've taken, which in this case is 4. We add all the stop losses together and we divide them by 4. So for this first one, we had a stop loss of 79 pips. So that will be 79. Let me get my calculator out. 79 pips plus, we go to the next one. This one was 45 pips. Stop loss was 45 pips plus, we move to the next one. This one was 50 pips, and the last one 105 pips. So we have plus 50 pips plus 105 pips. That gives us 279. Then we divide it by the total number of trades we took, which is 4, giving us average stop loss is 69.75 pips, or just say 70 pips stop loss. So our average stop loss, if at all we are risking anything, we calculate it with 70 pips. So that's what we've gotten just from that little calculation. So we've gotten our average stop loss. Next, we need to know how long we stay in these trades that we are getting into. So just like how we calculated the average for the stop loss, average time in a trade, that's for this strategy. So what we'll do here is, now there's a tool here that enables you to calculate the range, or how long your trade takes. So from the start of the trade to when it hits your TP. For this first one now, it's about 15 minutes. As you can see here, 15 minutes. For the next one, let's check. From our entry over here, same thing, about another 15 minutes, fast trades. Next, from our entry, here we have 1 hour 15 minutes. Next one, from our entry to when it hits TP over here, 6 hours 15 minutes. Now what we'll do is we'll convert all of them into hours. So I'll quickly do that conversion and get back to you guys. So guys, we've been able to get the average time in a trade, which is 480 minutes, or 480 divided by 60, 8 hours. So on average we are inside the trade for 8 hours. That's for this particular strategy. So all these details will go a long way into our journaling, because now we can accurately say, okay, if I take a trade, I'm expecting to be in the trade for at most 8 hours and at least 15 minutes. Do you understand? So this is just a snippet of the process Now we've been able to backtest and we've been able to get some entries for our journal. So at this point, you take this information you have, you take your rules, your confluences here, and you start forward testing the trade. That's the next step. You backtest, you forward test, and you journal. So you keep improving it, and who knows, you might have the next winning strategy. So that will be all for now. Thanks for staying to the end of the video. Love you guys. Don't forget to like, subscribe. See you in the next video.